okay, this was not expected. This is wild and crazy. And for some people, they'll think, oh, Randy, this is just nerdy stuff. This is not nerdy stuff. This is so significant that I can't even begin to tell you how significant it is. So even if you're not huge on numbers and you don't really like to dig into the details, I recommend that you hang in there with me if you truly want to understand the underlying foundational principles of the markets, of the economy, et cetera, because Truflation, in a way, has just let me down in a big way. And I think, there's some real questions about their methodologies. Okay, so what's happened? Well, their numbers just changed dramatically. They have just added 500,000 new monthly data points, according to their blog. This blog, by the way, came out after they made the changes to the numbers, which threw me off completely for about an hour as I tried to figure out what in the heck was going on. It was not an insignificant change. As you can see on the thumbnail, we went from about 2.37% inflation to 3.02%. So that is super significant. By the way, this is Randy Hurt. Hit like, subscribe, and notify. You want to be sure to be here tonight when we talk about the market at the end of the day. Okay, at Truflation, our mission is to provide the most comprehensive, accurate, reliable information on the U.S. economy. This last upgrade, in which we are taking our game to the next level, is focused on enhancing the breadth of data. So they take granularity to the next level. They have added information from Hyatt, Hilton, Trivago, and others. The total number of prices and goods, services, items added is 500,000 on a monthly basis, on top of the 13 million items they're tracking now. This data provided will affect multiple categories and subcategories, which include basically all of them. Basically all of them. I think food, maybe food and beverages, non-alcoholic, I don't know. I think everything is there. Anyway, the change is being implemented today, the 8th of November, and the impact of these additions is a mere average increase in the U.S. index by 0.11 over the last 3 years. But the day-to-day is expected to be slightly more dramatic. Okay, so over the last 3 years, they've been reporting about 0.11 under what the actual inflation was based on their new data. But unfortunately, over the last 2 months, when it was super critical, when the entire world was watching their data and the entire world was trying to figure out why their data was so much different than the CPI and the PPI, they have been wrong by a couple of percent, by a 0.5% or more. And this matters. People were making decisions based on them, including the Fed. The Fed mentioned Truflation. The Fed chairman, Powell, mentioned Truflation in one of his speeches. Now, in addition, this new data has also been used to revise all of our historical data. Yeah, we know that. So there you go. That's their statement. Now let's go take a look at what actually took place. Let's look at the details here. All right, so they have a new thing called the aggregated. I'm not 100% sure that that's very valuable, but here's the inflation data. As you can see, it's now for today at 3.02. If you look at a screenshot from earlier, you would see that it is 2.37. Now, that is 4.5% increase. That is significant. When I say 4.5, 0.45, almost a 0.5% change. That is significant. Why would that be significant? Oh, let's start with the current bond rate. Okay, the bonds are trading right now at about 4.56, 4.5, I think 4.6 rather. That would be very high. That would be over 2% higher than 2.37. Okay, 2.3% higher. But at 3.02, all of a sudden you're only talking about 1.6% higher. Now, 1.6, that's not out of line. That's not crazy. So as we analyze and we try to figure out whether the bonds are in line, out of line, wherever, and start to make predictions about where the bonds might go in the future, well, right now you have to say the bonds, they're pretty right on at 4.6. Maybe they drop to 4.5, 4.4. I would not be surprised to see them drop, but they are, if this new number is right, and the CPI next week will come out, we'll see how it compares. But then all of a sudden you're looking at the bond rate, the 10-year being closer to what one might expect if the inflation really is 3%. Well, now where did this big increase come? I've just lost my, where did this big increase? By the way, look at here. This rate right here was going across from about 2.5 here, was about flat straight across here. It was about flat all the way across here. It was up and down a little bit, but about 2.5, 2.4, all the way across. Now you can see massive increases as high as 3.27 at one point in this thing, then dropping down to 2.75. But at that point, it was like 2.3. And now, as I said, jumping way above where we currently are. Now, what about the details? All right, so the first one on their chart is food and non-alcoholic beverages. They're showing that now as being at around the dark blue line is always the average for this category, being around 2.25, and that would be as an okay number, getting closer and closer to the 2%. And it looks like it's fairly flat. If we're going to trust these new numbers, that would be an okay category. I think that's fairly close to where it was. I don't remember specifically that it was much higher or lower than that, but it seemed to me that I thought it was in a good place. Now we go to the next one, which is housing. Here is one of the big changes. Look at this number here. This is other lodging. Now, what we're going to find is we're going to find that other lodging. We're going to find that everything that has to do with leisure and fun, those are the numbers that are still crazy. Okay, people are just spending like crazy on travel. They're spending like crazy on eating out. They're spending like crazy on everything that has to do with leisure. You say leisure, I say leisure. Anyway, but look, they've added all these new lodging companies. Okay, that's one of the things they mentioned was they added all these hotels, and all of a sudden, other lodging. Look what it's jumped up from 2.38. Now you can't tell me that in November it was only going up at 2.38, and then all of a sudden it's going up at 7.89 in November. That makes no sense at all. Why would November is not a good travel month? The hotels would not be raising their rates in November. They might raise them in December. That's a big travel month when everybody goes to see people for Christmas. And then some parts of the country, like California and Florida and Hawaii, they do really well in January and February. But this jump, what's that jump? That's not understandable. But here's the biggie. Yeah, way more important than that one. Look at this bottom line down here. This is rents. They had been showing zero. Now there's no zeros at all. They've been like at zero almost all across here. And now all of a sudden rented dwellings are showing in at 2.01 right now and never having fallen below, what was this lowest one down here? 1.2, but it's showing at 2.0 now. Okay, I have to do some research on this. I need to take a look at Zillow and Redfin and some of these other people who report the rent statistics, and I know that they use them for their rent statistics. I'm curious to see what has happened in those rent statistics that they went from 0 to 2%. No, it wasn't a case of where the real world went from 0 to 2%. It's the data that is being gathered has gone from 0 to 2%. What is the issue? What is the problem? Why were they so much lower before? And as you know, this is a major, major category on CPI and PPI, and the major category that the Fed's looking at. So was the Fed privy to data that was better than were they seeing this data all along, which is why they've been nervous? Again, we'll come back to that in a minute if I remember. Sometimes I don't. I don't have any script today. I'm going, this is all not scripted. So I have to remember I want to talk. Well, let me just talk about it right now. Okay. So the Fed has been saying they want to get to 2%. They're saying the last percent is going to be the hardest. But if you're believing Truflation and you think that the inflation is already 2.35, and you can see tremendous evidence of downward pressure on things like oil, gas, et cetera, and commodities, and you've even seen it in cars and things of that nature, then you're thinking, what's the Fed talking about? The last percent's going to be so hard. But now all of a sudden you look at this and you're going, oh, if we've got this kind of a number for overall housing at 3.61, that's a lot different than what we were being told. And all of a sudden it's a big category. So what does that mean in terms of the Fed, in terms of their decision making? What does that mean? What will we be seeing maybe over the next few days in terms of headlines of people that thought, oh no, this is a done deal? What is Cathie Wood? Maybe even Cathie Wood is going to be changing her tune. I'm not sure. It is critical. This is a very, very big deal. Okay, let's go from there. We got to go to transport, another one with a major change. This one eliminated a category with no explanation. Okay, we have vehicle purchases, we have gasoline, other fuels, and motor oil, and we have public and other transportation. But there was a fourth category before, and the fourth category was kind of an other category, like things like insurance, repairs, maintenance, things of that nature, which were all very high. They were actually up in this range. They were in the 10% range. They've been eliminated. Where are they now? Are they built into the number somewhere else? No explanation. Can you see that I'm a little bit upset that, you're respecting these numbers and now they turn out not to be respectable. So if this is true, I think it is, gasoline, other fuels, and motor oil down dramatically, which is pulling the overall number down, but we're still looking at 2.59 for transport total. That would be a category, a big category, important category that we can maybe count on being a drag or, helping with the inflation problem. All right, we go next to utilities. This is a weird one. I'm sorry. I don't know what to do with this. We absolutely know that that on the market, natural gas has been falling off a cliff. And yet we have the opposite here. Look at natural gas. That's the green line. What is going on here? Show you a 21.23% increase. So we're being charged, our utilities have gone up that much since September 28th. So in the month of October and early November, we've had two step changes where the natural gas price that we're paying has gone up that dramatically, even though we know that natural gas has been dropping like crazy in the market. Well, maybe we'll see a change in this over the next 2 weeks or something, because the natural gas you pay at home, generally speaking, has to be reflected in the natural gas that the utilities are paying for from the major suppliers. Anyway, we'll see what happens here. But overall, this category, because of that jump, it is going up and is now 5.45. I don't have a recollection of what this was the last time I looked at it, but it wasn't this. So where did the new information come from? What did they find out that they didn't know before? It's driving me batty. All right, let's see here. Let's go on to the next one. We have health has become a single line. This was more than one line before. Now it's a single line, and it's showing health is starting to trend up again, but it's still under zero. My understanding is that next year there will be increases in insurance that will cause this to maybe be up in a higher number. But is insurance included this? I guess. But now it's a single line, and it used to be more than one line in terms of the things they were analyzing. The same thing happened in household durables and daily use items. This is also a single line now for all household durables. And this is one that has stayed high at 5.09. Now, it seemed to me this was more like 4, but we do see the trend going down and then back up. But the trend at least seems to be good on this. My expectation would be household durables and daily use items would be a lot of items that are freight intensive. And as freight comes down, and which freight has been coming down, you'd think this category would drop. You also know that durables have not been selling that well, so you would think that they would be dropping their prices. But again, maybe they are. So if you look at that trend. Okay, let's go on to the next one. Let's see, we've got the next one is alcohol and tobacco. I don't remember enough about this. It is trending down. I don't remember enough to say whether there's been any change there. We have next is clothing and footwear. This is an interesting one. It is going up dramatically. Now, what happened here? Again, how does it go? This seems to me to where the number I was thinking that this category, still 3.97 to me would be high, in this kind of an economy, why clothing and footwear would necessarily be even at 4%. But all of a sudden, in a day or two, I mean, basically since the 1st of November, on October 30th, it was 3.97, and now it's 6%. Why? This doesn't, I mean, how big of a category is this? It is 3.8% of the total. All right. So it's not a huge category, but why the massive change? All right. How about the next one? Communications. I think that stayed about the same. We've got residential phone service up 3.54, but we've got overall communications down. I don't remember enough about that category to tell you if there was any change there. Education, same thing. It's now a single line. Oh no, it's 2 lines. So we've got education total, and then we've got what's this other one here? Whoops. We've got education at 1. Who knows what that even means? All right, so we got whatever education at 1 even means, and then we've got it, but the total for education is still at 4%. Based on the way our kids are being educated, I think that should come down a lot. Anyway, it might be close to a political statement. Recreation and culture, but here you go. Look at this. Okay, so recreation and culture, all the way down to 3.5. Okay, so it's dropping, but the overall recreation and culture is still very high and has been extremely high. This might, I don't know if this is seasonally adjusted, but you might be seeing some, we're off season now, so you might be seeing some prices coming down because of that. And then we have this category called other, which is not a, you can see it's coming down pretty dramatically, but it's still at over 5% for this other, which includes personal care products and services. All right, so what in the heck is going on? That becomes my question. We also have this number here. This is commodities. So the overall commodities, you can see, I hope this is bright enough. Let's see if I can brighten it. There we go. That's much brighter. Okay. So you have overall commodities coming down from this 800 level, dropping all the way below this 600 level to about, 560. So from 800 to 560 since the middle of 22 to near the end of 23. So they're at the lowest point, almost at the lowest point that they've been in the last 2 years. In general, that would tell me things are going in the right direction with regard to commodities. That's the S&P, which is the one that people most care about. All right, let me know what you think about all this. Do you have an opinion? Put it in the comments below. All of a sudden, I have to change, literally. Because you connect the dots, you get your data, and then you make some decisions. And one of my primary data sources has just changed everything. So yeah, I'm going to say that I still believe inflation is headed down. I think that it's going to be mostly because of productivity, but other things will impact it, like a slightly slowing economy. Everything points to kind of a tough Christmas. The hiring levels, transportation costs, the amount of tonnage that's being moved, all those things, and statements by the retailers indicate the Christmas season may not be that great in terms of retail sales. Now then, you know what I've been saying, the money will still be spent. So the overall economy may not drop as much as expected because people will spend it on transportation and fun. That's where people want to spend their money right now. They want the experience. That is the future, folks. The future is going to be all about experience and fun. So tell your grandkids or your kids, if they're old enough to make career change decisions, going towards elder care, that's going to be huge. And robots are not going to do all of it. And going towards entertainment, travel, leisure, all those kinds of things, that's where the money's going to be in the future, including even being whatever I am on YouTube. All right, help me out down below. Let me know what I could, is there more that I need to look at? What didn't I tell you in this particular setup that you do need to know? And don't forget to buy your Cybertruck. Okay. All the information down below, $25. That's all they are. It's great. And it comes in camo. Come on now. All right. It's been great talking to you.